Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Lucky. How we do it in YouTube? Thanks, Steven. Appreciate it. Well, good morning, everybody. Thanks for visiting the Trader Lab today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. And this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars, so you can see what this process is. Now, what I show here in the stream is how to integrate Bookmap order flow tools. How do you use tools, high-tier tools, in order to attempt to gain an edge? The other part of this stream is about understanding this as a business. And in the business of trading, it is very much a statistically based business. And the Trader Lab is about building out the business side of the trade. Not only how does the market work, but the market mechanics, but also structured trades that you can reverse engineer, vet, and determine if you actually can generate a statistical edge. The business of trading is the same as gaming. So casinos only play games that have an edge. They don't change them. They don't skip the next hand. They don't do all the things we do. They don't make them up. It's not a video game. They just deal the cards. And they accept, which is very difficult for us, that what comes out of the deck when they deal is random and how the gamblers play the cards is random. So they have no control over the outcome of those random aspects of their games. However, they do control how they play the game. And it's because of the discipline they have to just play the games that gives them the ability over time in a random distribution of outcomes to extract the dollars from the gamblers. And of course, the gamblers get paid, right? And of course, because of our emotional attachment to outcomes, we have a real problem with uncertainty and also a problem with losses. Somehow it works pretty good for the casinos. Maybe we ought to rethink what we do and see if changing our approach to this, as opposed to being emotional beings who are responding to our fear and our compulsions, can become more neutral in the way we approach this as a business. And if that's something of interest to you, I invite you to come and visit the Trader Lab. There is no cost for this. There's a library of webinars, 60 PDFs of these structured trades, and a lot more, not to mention the Trader Lab community, which has come together. And its traders, our senior trader has over 50 years. I have 45. And the full range of traders from newer developing traders to very experienced. And it's that community that leverages their experience to create something better. And you're all welcome to visit. And if you're in YouTube, there's a link down at the bottom. Feel free to stop in and say hi. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is based on structured trades that you all can have access to. Now, what is a structured trade? It is not something mechanical. It is an actual trade structure that shows up in alignment with the current condition of the market. There is no such thing, in my opinion, as one size fits all. The market goes through different conditions and phases. You see that almost every day here in the stream, and you're going to see it today. So let's get into it. And thanks again, everyone, for visiting the Trader Lab. Hope you enjoy this, and please give a like if you're in YouTube, or as they say, a thumb up. It always is appreciated, and it helps the stream. In addition, if you have questions, please post them. I'll do my best to get to them, but my time is very limited. If you have more specific questions, there is a link in the bottom of YouTube. You can access the Bookmap Discord Trader Lab community. There is no cost. Ask your questions in there, and I can get to them later, or other traders in there can also answer them. So here we have RTH Open. let's go. Now, I'm going to be discussing structured trades. Now, please understand, everybody takes stops. If anyone doesn't, I want to meet them. So, there is no holy grail. It just doesn't work that way. If the casinos had a holy grail, uh, first of all, there wouldn't be any casinos because the gamblers wouldn't show up. The gamblers need to get paid. The other side of our trades gets paid. The idea is, can we get paid more than they get paid? And a lot of us in trading think we have an edge where we don't, because we haven't done the work to determine if what we have is just random, which is a loser over time, or the other side of that, we actually have a statistical edge. And even though we can have losers, we will have losers, that over time we extract dollars from the other participants. Do you know the answer to the question? And most of us are in such a hurry to trade that we just throw that idea of work away, research, understanding. Now, let's hear RTH open. So what do we have? We had a trend day up day before yesterday. We had an inside day yesterday. Let's think about what an inside day is. An inside day is both sides. It's like a standoff. So both sides are active. And yesterday, we had something in the profile world, or the volume world, if you will, that was called a neutral day. Neutral day means the first hour high, first hour low is taken out, and the market is in a mean reversion condition. And if you are in the Trader Lab, remember these streams are available exclusively to Trader Lab participants. You would see a specific plan for trading yesterday, and it was rotational trade plan outside in, from the top down and then the bottom up, and whatever else happens in between. It's about staying in alignment. But in the Trader Lab, you'd have a specific plan for yesterday. But what is a balanced day? And all this is important before you start trading today to know the condition of the market. Balance, when you have two sides, it's almost like two armies with a trench in the middle. The trench is where the think of it like the selling side comes to the trench, the buying side comes to the trench, and they're battling back and forth. And in the end, it's neutral in the sense that both armies now are encamped in a neutral position. Nobody won. Or think like rugby. You know how they push one side out, then the other side pushes back, and the other side, or a tug of war. Any way you want to visualize it. That's yesterday. But also, what is it? Compression, a coil. A lot of ways you guys think of this, or a consolidation. Now, inside of this volume, what happens is, now obviously we can go either way coming out of this thing. But what do we know? The day before yesterday, we had a new all-time high, trend up. So if we know we're in an uptrend and that the sellers did not have their way with the market yesterday, that gives us a leaning if we get a setup for it, or structured trade for a potential breakout to the upside. But we don't know, because the market could go down first, even test yesterday's low, and then turn around and go out the top. It could do anything. So we start out knowing the condition of the market, and then we allow the participants to suggest, and that's all you get with this, where there's structured trades, suggest structured trades where you get involved, and then you put your helmet on. Now, some levels. This is today's RTH open. This is the ETH volume point of control. If you're not familiar with these terms, you can use the link in the bottom of YouTube to visit the Bookmap Discord Trader Lab community. There's a primer webinar in there. It's got about 40,000, I don't know, maybe somewhere, 35,000 views. It'll give you a high-level overview, so you'll understand what's going on if you're not familiar with how the market works, which is called auction market theory. What is the purpose of the market? What's too low? What's too high? What's just right? And since we operate in multiple time frames or fractals, that means this behavior happens everywhere. So you guys think of time frames. Clock is not part of this. It's the participant behavior for me. Doesn't mean you can't use time, but why try to fit the market in the box when the participants are not looking at their watch when they interact? So settlement, this is the highest retail price from yesterday. This is where most of the volume took place. ETH, most of the volume. RTH open. Now, let's go a little further. ETH high. Now, if we start moving to the upside, and this, of course, is part of the thrill, it can go either side starting out. This has a high probability. If we break to the downside, we have the ETH low and yesterday's low. Now, let's think about something here. In the ETH, we tested yesterday's low. It is too low. Now, we can still come down and take it out, but I'm just saying this is before we open. Am I spending too much time? And you're going to say yes. And I'm going to say, I need to know where we are before anything. Yesterday's high, ETH high, all-time high. And once we get out over the all-time high, we're in what they call uncharted territory. Now, let's get into the open and the first trades. So, watch very closely. This is order flow, and I'm going to be describing how you might use it. Bookmap is specifically a high-tier order flow tool, and there's a lot of tools in this toolbox to see order flow. For the stream, I have minimized it to the essential elements, in my view, to help you see what's going on from an educational point of view. Okay, there's more, there's less, it's whatever you want, just like everything else. But now let's talk about what it means. If the RTH open is actually right here, I have what? Selling icebergs. This is delta. Buy delta, that means aggressors. That includes stops and market orders. Sell delta, sell stops, market orders. Yellow line is called the developing volume point of control. Think of it like shopping. It's a retail price. So wherever the volume is, that's the price everybody's doing business at. If there's more volume here, then the retail price goes down to here. Think of it like your store. Same thing, you go shopping. This is the price of S&Ps at this point, and we're not even in here, 5 seconds? They lower the price. If this price is too low, and now we have more volume up here, the price goes higher, and then wherever. So we're using the volume. That's why this is, quote, auction, which is about pricing. And the volume profile is a chassis to attempt to read the behavior. So let's go. Now, the open is an extremely aggressive place to trade. And I always say developing traders should not trade here. They should observe it and try to develop unconscious competence, which takes a while. This is like speaking a foreign language. The thing with this is very fast. If you look in here, we're in 10 seconds. So right here, this is what I see. Market opens here, too high. Market comes down. New retail price. Looks like it's going to go lower right here. Now, I'm thinking, so you know what, I'm going to tell you what I'm thinking coming in. Well, I know, remember, top of the stream. Trend is up. Yesterday was a standoff, basically. One side's going to cave in. We had UOM, we have UOM at 9 Central Time, important report. And of course, we had another report this morning, was important. And we're sitting in two-sided trade. The reason it's two-sided, because we're opening on top of the ETH volume point of control. So this is like a neutral stance at the moment. So it can possibly be still two-sided trade, or one side can take the ball, and we don't know. So right here, it looks like it's going to rotate down. I'm looking at this and I'm going, and here's something else that's very important. This being the retail price, do I want to buy retail, or do I want to buy on sale, and do I want to sell when it's too high? If I think this is balance or a fair price, I don't want to do business here. I'm just telling you me. So this came out here. I know it can come here. It can come up here. I know it can come here. So in here, I'm like, what's going on? So watch. So right here, this is called a variable high volume node. I made these terms up when I started doing this. I didn't know anybody was doing it. In fact, some of the more market profile crew actually gave me heat, if you will, for these concepts because it wasn't in the literature and nobody was thinking this way, at least as far as I know. So, and this is back a long time ago. I learned market profile, I think in 1985, might have been. Can't remember anymore. Somewhere in there. So this is like your shopping price. Market comes down here. Now let's look at the delta. Sellers going to zero. But if the market breaks high, so in other words, my buyers take over here, what happened over here? This is important from an order flow point of view. Now, I don't know until this. So I have to have the benefit of hindsight, but it's very short term. Don't forget, this is like tick charts. These sellers here were absorbed. So there's a buyer here. Now you can see the iceberg. So those are the buyers. And here's the delta. The delta is aggressive sellers and sell stops. So I see my seller. Okay, going to zero, right? Except look at the aggression here. So, and we cross over this. So potentially, this is now, this was absorption. They were absorbed. The passive side is under here. You can't see them. Now I'm spending time on order flow so you can understand all these pieces and how you might interpret them. And again, I don't know that this is the low of anything until I cross above the seller. Then I know the passive buyers were here, which I won't know until the buyers are above here. Now, one more piece. Remember, this is where the higher volume is, and now I'm in fractals. I call it a variable high volume node. So this is the shopping experience. Microstructure, and I'm going up in time frame as you think of it. So this is too low. Now they raise the price because there's more volume here than there is down here. Volume here, volume here. So the buyers are here. The buyers got run over there because the sellers were there. Now the buyers are here. Order flow. I come up here. I see my seller here. I've got my sellers there. Passive. Sellers are here. I need to clear this to go up. VPOC migration. It looks like we're going higher. Where is too low? Here. So right here, I'm going, I don't know. Because I truly don't. I never do. Nobody knows in anything. Watch. What was too low? Well, here's what I know. This seller's under the bus, this seller's under the bus, passive buyers. Buyers, buyers, buyers. What do I know here? Sellers came in here. Buyers here, shift here. Looks like it's going to go. What happened here? Passive side took it here. We come back here. What am I testing? These buyers and this. That's along in the trader lab. This is along in the trader lab. This is your resistance. If you take a long here, and it's very tight, this is resistance. Now, there's something else. Statistically, the overnight mid has a high probability and the naked volume point of control. Now, all these statistics, I talk about them every day in the stream. I'm not going to do it today. But this has a high probability. By the way, why would we come here? Same reason we came here. Shopping. The variable high volume nodes in the developing daily time frame are locations of the shopping experience. And the market in the developing time frame is auctioning to try to figure out what's too high, what's too low. And it changes all over the place. This price is from yesterday. It's fixed. It can't change. This is the highest volume price from yesterday in the shopping experience. And we have settlement. Is it reasonable to think if you got long here and if you get past here that this is where you might go? Question, what do you think? If that's the case, you would put your long on here. And since this is really close and there's not a lot of meat on the bone, you would have to have some faith. Why? Inside day yesterday, both sides active, trend up the day before, new all-time highs, and this is called faith. And you know what else it is? Risk, and it's always maybe. You would take your long here, here, Remember, support, buyers, these guys were absorbed. Resistance here, target. Let's see what it does. Okay, now, so you would have your long here. Let me give you another one. There's more than one way into this. This is resistance. So notice, look at this. Notice where we come. Long, so support, resistance. Support, resistance. Right there. See the selling? Now, so right here, I can look at this, and if you're in Trader Lab, you know you got a long here and you got an obstacle here because these guys, the sellers, were here. Is this logical before I move on? This is kind of the basis of understanding market mechanics using order flow coupled with structure, coupled with structured trades, and the volume profile. Everybody with me so far? How we doing in YouTube? Thanks, Newsman. Thanks, Lucky. How about YouTube, guys? Okay, thanks, Lee. Okay, now, next structured trade. This is the long. This is the entry. Now, there's another piece to this. We have a report coming out at 9 my time, Central Time. So I know if I take a trade, I got to take care of business before that report and either be out of the market or whatever. By the way, here's my scale, right? So now it's just trade management. So let's look. Oh, I was going to say, this is an entry also. This is called VPOC migration. Resistance is here. Remember where support is. Support. This is also support. This is resistance. When this shifts up, what does it say? This is language. This is too low. What about down here? Too low. What about this? Too high. Retail. Shifts up. Too low. Language. I'm following process. You can learn this. And what I don't, since I don't use indicators, my indicator is volume and participant behavior, order flow. I don't want a lagging, conflicted, backward item. You can, but if you understand market mechanics and you know where you have an edge, maybe then you can deploy an indicator more appropriately and not just try to think this is a red light, green light business. I can assure you that's what most retail traders do because they get a trading toolbox and most of them do not sustain, as we know, based on the failure rate, which is extremely high. They cannot sustain a career. So some of this has to do with why. Ask yourself, why? How about they're all doing the same thing and maybe what they're doing has no edge, but it is randomly successful, was for me. I mean, we could all throw an indicator on a chart and have winning trades. In fact, you could have nothing on a chart, not even use a chart, and have winning trades. So what does that have to do with anything? So VPOC migration, another long in the Trader Lab. Yet your scale still is here because that's the retail price. So now the market comes up, VPOC migration. Now what we want to see here is we want it to push off. Where are we trying to go with this thing? ETH high is the next target. So let's watch. So these are all Trader Lab trades and Trader Lab participants. This is what they do. Not saying it's good, bad, or indifferent. I wish, I just say it's a way if you want to build a business, that's what you would do. This is your target, okay? So the way this would work is you'd be long. Now, there's a couple. Now, here's where things get a little individualized. If you're, depending on your trade plan, you have a trade management process working here. And let me show you how that might work. And again, this is not a recommendation. Different traders trade with different time frames as you think of them. For example, there's traders that are going to ride through this kind of stuff, and their stop's going to be under the low of the day or way out here someplace. because if they think we're going to get here, why would they get out of position? Other traders are going to be micromanaging the trade in shorter time frames and fractals and get taken out of this. And then they're just going to use another structured trade like this to come back and get long from another location. So I want you to know there's many different ways to manage your trade. How you enter and all the rest of it, that is a different animal. You can use the structured trades for that. So I'm not going to discuss trade management. I will give you some ideas because I want to move along here. Now don't forget, we're going here because we didn't get the overnight low, right? And let me give you just a quick statistic, just one, just so you have something to think about. There's a 93% probability we'll either take out the ETH high or low. And of course, it could always be one or the other. It doesn't even matter. But since the trend is up and we got our buying off the open, then we have 93% probability-ish. Past performance, not indicative of future results. You got to vet all these statistics for yourself to go there. Also, yesterday's high or low. Let's write this one down. Well, the ETH low was higher than yesterday's low. Our probability of taking out either yesterday's high or low is 85% probability. What do you think? 93%? $85%, not recommendations, and then you put your helmet on. All-time high. Are you guys tracking? So if you're in Trader Lab, you are long biased. Doesn't mean you can't fade or short but for me, when I'm in a situation like this, what I tend to do, and by the way, what I do is not, I'm not saying, but let me give you an idea. What I tend to do is either, and I'm going to give you the choices, I can keep my stops way outside and just ride through this stuff and have my stomach flutter. Or I'm going to use these microstructures for trade management, and it looks something like this. I'm going to show you a little trade management. And again, it's not material to what I do. It's what you would do. Because you decide your psychology. Suppose you're sitting in this and you're long from, our structured trade down below. You're risk neutral. You're hanging out. You're working on your crochet. And then you ride through something like this. It's almost a 10-point, whatever it is. Is that okay for you? Or are you going to lose your breakfast? If you're going to lose your breakfast because psychologically you can't deal with this without it causing a lot of noise and problems for you, then it's trade management. So let's look at some trade management. So let's just say we're going up. Don't forget, I'm going for this. Buyers are here. Passive buyers are there. Passive sellers are here. If I break high and I hold this micro volume, which is here. So let's look what we have. Now this shifts up. This is now balanced. Let me tell you what this will do right here. I'm going to get to this. We can do this rotation here. What this is right here, when it pulls outside, all it's doing is going, where's too low? Well, here's what we know coming up. Notice the volume here. Buyers are here. We take over the sellers there. Buyers are here because we're above them. Buyers are here. We check what happens here. These buyers still interested. Oh, really? Okay. Buyers are here. Buyers are here. Stop sweep. And I see absorption here. That's the icebergs. I'm showing you some of the tools. So here, one moment. Sellers are here. Buyers are here. Buyers are here. I'm above the sellers. These guys are under the bus. And when you see an iceberg, it doesn't mean get short. It means we don't know their agenda. These are all selling icebergs coming up. We don't know what they're doing. Are they taking a profit? Do they think the market's going lower? What do they know? I don't know. Do you know? Let me know when you know, because I don't know. I do look at the icebergs because I want to see what happens after that iceberg is active. And this buyer, this delta, was absorbed. And remember, delta is aggressors and stops become market orders. That is measured as an aggressor. So I'm above this. It says higher. Selling icebergs are here. And I think of this, another way to think about this is Pac-Man. Are the buyers consuming the sellers, or are the sellers absorbing the buyers? That's kind of what it is. So when I get a buyer, am I making progress even though I see sellers? So what happens here? Sellers are here, buyers are here. It's a consolidation. Sellers are here. The buyers are there. The buyers are there. So that's what I know. I don't know until I come back above that the buyers were absorbing. I can assume it as soon as I'm above this. So this buyer's here, the seller's below. The buyers were there. If I come above, then I know this guy's under the bus and the buyers are here. I come up here. What do I know? Sellers were here. And what do I see? Potential sellers are here. VPOC migration going higher in this fractal. Now what? Sellers are here. Sellers were there. Sellers are here. Buyers are here. Need to go north. What do I see? I get below this buyer. Now the sellers take control here. So the sellers are here. Now, so I'm looking at this. Now, here's the other part. This yellow line is the retail price. The market can do this when it's at a fair price. In other words, is this too high? Yeah, where's too low? We don't know. So you're either hanging out or you're just going to keep your stop away. Now, we have another structured trade here that's going to set up. I'm going to show it. Now, let's come over here for a second. This is a distribution. And all this is, when you look at a consolidation, this kind of thing, this is what it looks like in volume. So all I'm doing is I'm taking the volume and I'm looking at where it dries up. Let's think about shopping in your store. If the price gets too high, you'll notice there's less buyers, assuming this is too high, and we don't know. But if the price goes on sale somewhere, wherever it is, and the market doesn't stay there long, that means that price is too low. Think of a sale at your store. So the price can come down, but if the buyers say, are you kidding? You want $100 for it over here and I can get it for $75 over here? They're going to buy it. And the sellers then are going to raise the price back to retail. This is what creates rotation. So if this is too high, less buyers, I'm not paying that. Back to retail. That's what creates rotations. And, it's on sale. Then back to retail. And this happens in all fractals and time frames. So when you even see something like this, it's the same. So that's what is trading in fractals. So anyway, explanation, right? So sellers are here. And right here, I don't know until I see this. They were absorbed. So you see this seller. Why did the price go up? Because there's a passive buyer here. And there's the iceberg also, which is passive. That's a limit order. So going up. So now you see the genesis of the up. Now let's look at the down. No way to know. So don't think you can predict. Guys, we're not in the business of prediction. We're in the business of maybe. Maybe it'll get there before it goes down. Maybe it won't. So where's too high? If I can't pick the high, and it's not because of my skills, it's because nobody picks the high, it's only clear in hindsight, then we have to have a trade management process, or we're trading a higher time frame as you think of it, and my stop is way far away from this noise. But let's assume I'm managing. So here I have buyers. They're absorbed. You've seen the red bubble. The reaction off of that delta is what's telling us that there's a buyer here. Not the fact that it's red doesn't mean it's going to go down. The fact that it's red means there's aggressors here. And when I don't go down, I'm now seeing, or I can understand then, that there's another participant on the other side. Remember, it takes a buyer and a seller, right? So now I got my sellers here. What happened up here? Sellers, resistance. So I come here. These guys were absorbed. As we say, they're under the bus. That means there's buyers here and buyers there, and buy icebergs. Buyers now are here. Buyers are here. Now, I don't know. I got to get above this to go higher. I go higher. Okay. Too low, moving north. Watch. Buyers are here, buyers are here, buyers are here. Sellers are here. But I have buyers here. I have buyers there. And I got buyers there. Sellers are here. Sellers are there. I take out the seller. I'm above here. The buyers are still in control over here. Buyers are above here. I know I'm spending a lot of time on this, but this is order flow. So what I'm doing is while I'm in a trade, I'm reading it. I'm going, what's going on? Right here is micro high volume. This is a little consolidation, right? If I break out of consolidation right here, isn't it possible I'll come down and check it? Is this really, in other words, buyers are here, sellers are here. The volume here is here. Breakout, watch. So this is your break. This is your test going higher. So now sequentially, so I do, or can do, it's up to you, is keep doing the same thing. This is your retail price. I break high, too low. This is my retail price. I break high, come back and test it, too low, break high. I have my high volume here, right here, looking for it to break high. What does it do? Breaks low. What am I going to do with that? Trouble. So here's my choice. I can be trailing here or nothing. And right here, and don't forget, I'm going for the ETH high, right? I break here. I come back. This node right here is my high volume. It is too high. And now this is mean reversion. So what happens here is too high. And now this. Now I have no clue, only in hindsight. So for me, subject to my trade plan and your trade plan, you would already know what you're going to do if you get a reversal. Here's the other thing you know. If you get a reversal here, even though we have our target up above, then we'll come potentially back here. And then the stops under here are on the hit parade because the market will trade into the stops. In other words, let's go think about it. If we have longs in the market, you have to look left. Where's their stops? Well, they're under all these swings. All our little day traders like us, we all do the same thing. So I think of this as fuel. So, and I don't know anything until here. And then it's trade management. Because remember, I can be all the way out here someplace and not even deal with this, except my breakfast would be on my desk and my keyboard would need to be replaced. So when I get this, even if I don't exit on this, when it breaks and I can't get back here, and this is my support, don't forget, I could be out of the trade. And no, I don't get all of it. I don't get anything. I get whatever I get and I go on. So what do I know? Too high? And this was your support. Remember? Break, test, north. Support. Break here. Hasta la vista. Where are we going? Here. And where's the stops? VWAP mid. Now, and we have this. So now let's look. Now I'm going to be looking for another long. This is a Trader Lab trade. Where are we? Mid. So let's look at this. And let's look at something else. What's this? Wasn't this the retail price from yesterday? If we get over yesterday's retail price and we come back to it, isn't this a price check in the supermarket? Because we went above it. Now, anything can happen. But if I come back to settlement, yesterday's, and these are structured trades, don't forget, and mid and VWAP, and the current retail price is higher than this. Now, you're going to find this confusing if you don't think this way. This is a language of the market. So it's not going to fit with your thinking if you've been, weaned on indicators translating behavior. What this is understanding how the market works, why pricing gets created, and how at times we can anticipate. There's a saying that I coined called, you got to anticipate to participate. So in the Trader Lab, you have structured trades, right? You would know that VWAP, mid, and this are locations. So, and let's assume you got long at the mid. Let's talk about this. Suppose you took this. You want to buy the mid. Okay. So you see a long. This is your obstacle. So this is called mean reversion. It's a separate plan. And remember I said we have different plans in Trader Lab. This market has changed from directional, though the trend is up, to rotational on top of itself. So we have a different plan for this. If you got long here or here, you got to scale ahead of this. If it comes outside, you have choices. Notice the absorption here. That says there's a buyer absorbing these sellers, and there's 9 sell stops, and there's an iceberg. So that's what's going on right here. I come out here, and we're going to 0. But where am I? I'm here. So buyers are here, and I get under this. So subject to your plan, I'm just going to tell you the way it is. If you got long here, you got to scale ahead of this. I always give it 2 ticks. You'd have your risk would be off, minimum 2 lot configuration. You could have your stop under here. Comes under here, you get taken out of the trade. You scratch. Your broker sends you a gift basket, maybe love potion number 9. Now you have absorption again. We come outside. In Trader Lab, you would understand. I call this a stop pick. What did we do? Pick them off. Where's my long? Let's look. I got buyers here. My sellers are here. So seller, going to 0. Buyers are here. I rotate up. Buyers are here. I come down. Sellers are here. What's here? The passive side. Buyers are here. Icebergs. Right here, I have my volume, and it's a fight right here. Dono. Mean reversion. Resistance is here. So right here, I'm looking for a long entry. Let's just see what happens. See? So my volume is here. I come back here or here. This is a long to here. Then you got that. Notice where it is. So you have long, scale, obstacle, and you're looking for that overnight high, if you remember that. Seems like a long time ago, but that's what we're going for. Because statistically, it has a high probability, right? And there it is. Now, you may lose your breakfast, with this. Variable high volume node is here. I got to mark it, by the way. So this is all structured trades. Now, you may say, I can't do that. And I'm going to say, if you don't understand what's going on, no, you can't do it. But you think you can learn? Because if you come to Trader Lab, I believe anybody can learn this. It's just you got to roll your sleeves up and make a commitment. You want to be a high-performing athlete? You want to be a professional, and you have to be at a high level in order to compete in this business. Is there any reason you can't, other than your choice? Are you going to choose to do things that don't work, but have random success? By the way, we've all have runs. I mean, if you're flipping a coin, if you've ever done the coin test, it's a coin exercise. You can actually make money flipping a coin in this business at periods of time, and then you still lose your dough. But I'm saying is you can do that. So this is the next target, okay? So long story, right? But I want you to see too low, retail. Where do we come? VWAP, retail, break high. Where do we come? This now is the new retail price. Pricing is moving higher. Target. Now what? Yesterday's high, remember, 85% probability-ish You have to vet that for yourself. Past performance not indicative of future results. So let's keep an eye on this. Where's support? It's now here. VPOC migration. Liking it, Lewis. Going north. 85% probability. Then we have the all-time high, and after that, clueless. Wherever that is. And now I'm going to look up for your questions. I think we got over I'm sorry, the all-time high is over here. Sorry, guys. And we come up here. So now I'm just going to show you the exit. Now, again, nobody knows, right? We're in uncharted territory. So what do you do? Well, there's a couple things. The ETH high, you could be done with the trade, or you just manage it, which means you start using these structures. Buyers are here. That's support. You can see it right there. We have another consolidation here. You see it there. This is your consolidation. It's, oh, I'm not paying that. Oh, but it's on sale. Now you got to be kidding. And we're looking at this right here. I'm just going to draw a little box. I'm just going to show you this real quick. So you could kind of see how this manifests itself in volume. So in here, and then there's a high volume node in the middle. Let me just draw that for you. So what this is what a consolidation is. Buyers are here, sellers are here. I'm not paying that. Yeah, but it's a heck of a deal. The retail price is in the middle. Okay, I break out, and where do I come? I come back to here. And this is really support. But in a breakout, you see this all the time in breakouts. They come back. Now, I'm not a breakout trader. What I am is a volume trader. So I'm looking at the order flow. Remember, the sellers were here. The buyers are here. The retail price in this little store, it's like a shopping experience, you know. And if this price is too low, and now the participants leave because there's no more S&Ps here at this price, if I pull back, I can buy it. There's my sellers. Where's my buyers? Here. Where did the sellers get run over? Here. What's this? My sellers come back. What happens to them? Absorption. There's my buyer above the seller. This is a long. Stop is either under here or under here. And off we go, having a wonderful time. Now, let's come back to this. Now we're up here. Volume is here. You can see the distribution. Let me show you the distribution. And I will look at your questions in a couple minutes. Please post them. I'm going to come up for air. I'm trying to show you fractals. So I'm showing you multiple time frames as you think of them. But I don't use time because the behavior is not clock-based. So it's not like, oh, let me look at my watch. I got to wait 5 minutes for something. I don't wait for anything. I'm staying in real time as best I can. That's what I do. And then what happens from there happens. It's all random. So right here, micro high volume. You see the little high volume there? What does that tell me? Too low. I come up here. Where's my volume? It's there. What does that tell me? So here, too low, break high, support. What about this? Break high, support's here. Sellers are here. See the distribution? What's up here? Too high, microstructure. Let's just watch how this all fits. Support is here. Resistance is here. This is your current high volume. It's right there, retail. Resistance, let's see what it does. Notice the behavior. Support is here. Breakthrough, trade is over. Up to you. So for me, I'd be out of this thing long before it gets to wherever the high is. I don't even know where it is. Okay, this is 930 is the IB. So remember, we have a high probability of taking out either the IB high or low. And we don't know which one. I'm inclined to think it'll be this one, and this is what I'm trading towards. Okay? Now, right here, we come up. 930 is the IB. The IB stat, remember, We have 97% probability. Past performance not indicative of future results. Will take out either the first hour high or low. So now for me, I'd be out of the long, but let's assume if doesn't matter. If I'm out of the long, and I'd be looking for another long up here if I come out. So I'm trading longs. That's what I'm doing here. We come out here. Let's look. This is support. This is now resistance. You can see it here, right there, the high volume node. So come up here, break, chop, chop, chop. What's up here? Sellers, sellers. There's my seller. Okay, change. Do you see any other selling like that other than here? Selling. What's too high? Right there. If I'm sitting long, which I wouldn't be, only because I'd be taken out and I don't put another trade on until I have an actual location for one, then this is resistance. Where is my support? This is support. So I have choices here. I could put a trade on here, and this is my resistance. I have to scale here. See? So I can use the structure because at 9:30, I have that high probability of taking this out. So I'm going for this, and this is a trade actually I took. So I got long here, scaled here, and I'm going for the moon. How do I know? Don't know. And that was that. So risk neutral, stop is under here. Come back here, got to get through this. And you could see here. So get long here. Now, I can't buy this. It's not my thing. So for me, I get long in here. I scale ahead of this, and then my stop is under here. Come back here. I see the absorption. My stop is under here. I'm thinking, gotcha now, and I got to clear this. And what happens right here? Let's go more to microstructure. I'm just showing you what you might do. I'm not saying what you should do because I don't know. This is too high. This now is the volume here. I get my seller. If this holds, I got to clear this and this to come out the top to fulfill the statistic. This is resistance. This is resistance. Right here, what do I see? Seller. Problem. There it is. Okay, I think that will get us going here. And there's other trades I'm going to show you. Now we're back in rotational trading. This is mean reversion. But before I continue, questions. Thanks for your patience. Questions. How you doing in YouTube, guys? Conscious? Please give a thumb up. A like helps the stream. Remember, you're all invited to the Bookmap Discord Trader Lab community. I'm going to show you a little something here. I've never shown this before. I want to give you an idea what this is. This is what the Trader Lab chat looks like. You can see there's chart posting by the participants, questions, what's going on, So all of this is the community of the Trader Lab. Oh, who's that? Charts, commentary, support. This is what Trader Lab is all about. If you're interested in Trader Lab, there's a link in the bottom of YouTube. You're all invited. There's no cost. Remember, there's 60 PDFs of these structured trades that I'm referring that you can download, reverse engineer, but you need help. And you can get the help in the community. That's why we're all in the same place doing the same thing. We're working on getting better collectively. So, too high, hindsight, very clear. So how do you deal with something? Because you understand market mechanics, not indicators, market mechanics, what the participants said. This is the language of the market. And what the indicator is a translator. It's all it is, but it's way behind. And when you have multiple indicators or time frames, you have conflict. One says long, one says short, one says, ask me later. Well, this is right here. This is right here. That's as close as I can get. And then the order flow. Shows me right here, there's absorption. This is still okay for the long, and here's the resistance. Here's my buyers. Why am I not going higher? Sellers are here, microstructure. To go higher, I got to clear the passive side, which is here and which is there. You would know this using order flow. Now, you don't know how it'll resolve, but you do know that if you can't get up here and you see this, that there's a problem. You could punch out of the trade, or subject to your plan, you're just trailing under here. See, all that is subject to. You figure that out in TraderLab. Now, here, if we're going higher, you got to hold this and then clear this and clear this. Doesn't happen. What happens now? We fall outside. Now, we are in something called mean reversion. This is outside in trading. And mean reversion is my least, I don't know, I guess I'm going to use the term favorite condition, because with mean reversion, what you're trying to do, the yellow line is called the mean. And what it is you're looking for the mode, but let's call it mean. You're looking to come back here. So it's outside in. This is the shopping experience. If this is the current retail price, if it goes on sale, you being the astute shopper, you're going to go, oh, really? And you're going to buy it. And it's going to come back to retail. And then the possibility comes that it gets too high. And if these sellers up here think, I'm not paying that, you crazy? They sell it again. And then we come back here. So it sets up rotational trading. Now, for me, I have that high probability, the first hour high, I'm only taking longs. So, I mean, it doesn't mean, now, when I say longs, I'm saying based on the trend. If you are a counter trend rotational trader and you have a vetted plan, these are shorts also. But if you can't execute a vetted trade plan with the trend, then you have no business, in my opinion, at this point, trying to trade against the trend. The probabilities lean to the long side. So let's come back. So too high, break out, come down, I should say. Pull back to the structure, now too high. This is all from over here. This was support. You know the saying, support becomes resistance. So this was support, it becomes resistance. This is support. Break below it, it's resistance. This is support. Break below it, it's resistance. Test it. If I don't clear it, it is resistance. Come down here. Now, this is support. Now, the further out I get, the more I like it for a long, which might seem like nuts, but we'll see. This is a long. Let me show it to you. Now, this is a little advanced. Now, remember, this is called mean reversion. So, and you could very easily get long here or get long here and take a stop. Easy. This is resistance. So if you get long here, let's look at the long. By the way, does anybody not take stops? Come to TraderLab. Let us know how you do that. I'd be very interested. I've taken so many stops in my career, going on 45 years of this. But it's okay. I mean, think of all the in the casinos, how the gamblers get paid. So here's the break high. Here's the absorption. And I'm at it outside. Remember, I'm trying to get outside, and this is where I'm trying to go, the mean. So this is the same trade. It didn't work. I came here. Here. Trigger. So let's look at this right here. You see this volume? And don't forget, this was here, I think. Break high. There's your trigger. And in the TraderLab, your entry is against here. So you would get long here. You get stopped out here. Let's just assume you took a stop. Can't take stops. You can't be in this business. You got to take stops. Every business has cost of production and overhead. Another trigger. This is your target, don't forget. Here's the entry. Stop is down here. You're going for this. It's called mean reversion. I took this trade. Now, scale is here. Ahead. I always give it a couple ticks. And then hanging out. What do I have to do? I got to clear this. Where am I going? theoretically, I'm going to take this out. 94% probability. Where's my resistance? It's up in here. What's this? Too high. Micro high volume structure. Right there. Pull out. So far, the structure is okay. Looking for it to clear and come across to here. Again, this is my trade. Just saying. Doesn't mean it's going to work. Wish it did. Didn't. So, come up here. What do I see here? I know my sellers are here. I know my sellers are there. And I see absorption here. Now, this is the absorption detector. I'm seeing these icebergs going off. 3,000 icebergs. We were talking about icebergs earlier. Does this mean anything? That does. Because it's outsized. So now I see my sellers, big icebergs. That's limit sells. And I had selling up here. And I have my statistic. So I'm going, but the order flow is saying there might be a problem here. So this is where you have to have a plan already built out. Not what do I do now? It's not the answer. The answer is your trade plan. Where does this fail? It breaks under here. Because what do we get here? Chop, 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 chop. What was this? The buyers are here. The sellers were here. We took over we pushed them out. Where's my support? It's here. Why? Because of this. Where's my sellers? Here. Here. I got to get over this to have an opportunity to come up here. So watch the structure. See what happens? More icebergs, more absorption. We got to clear to go north. And then we break down. So that trade's over. Okay? Oh, here's another trade. This is a structured trade in the Trader Lab. It's right here, and it's called VWAP to VPOC. And these are in the PDFs. This is along in the Trader Lab right here. Let me show it to you. So we have a location, and it's a structured trade, VWAP to here. And this is a very nice trade if you think the trend is up. Since we're over all-time highs, and we're still outside of yesterday's range, which is yesterday's high, the possibility is to go here. So the way this trade would work is, let me show it to you. First of all, you got location, right? So we're going down. Now, what do we know about the VWAP and the mid? There's stops here. That's what we know. What else do we know? Maybe. That's what you know. Write that down. Maybe. Maybe if we get long here, maybe we can get back to this, because that is a structured trade in the Trader Lab in alignment with the trend with a 90-ish plus % probability we take out the first hour's high, which is all the way up at the high of the day. Is that a trade that you would consider taking? So here's the structure. Now I'm going to go into the micro. So we're going down. So right here, I see the selling. I see here. I see a buyer above this. I have a suspect right here. My resistance is here. My resistance is also here, but here in the micro. Sellers, buyer. I'm above this guy. I'm looking for a long right here. I'm looking for a long. But I have my sellers here and my sellers are here. So I have my buyers here, my sellers here. I take these guys out. Sellers are in control here. I get my buyer here. Where's my sellers? They're here, here, and there. I got to clear these sellers. Buyer here, ready to hit the button right here. Now, I can't take this trade because I'm streaming and I don't initiate. I do manage. Buyers are here. So right here, I think the mid, but I'm above the all-time high. Let's look at the change. Absorption, icebergs, sell stops, buyer here. This is the same thing as this. Seller here, buyer here. Seller here, buyer here. It's a suspect. My sellers are here. How can I get long? I need to get over these sellers right here. Watch. Where's my volume? It's now there. So I get my trigger. This is a Trader Lab trigger. You can learn this. And then my VWAP is here. My volume is here. This is along in the Trader Lab. And then you're looking to get risk neutral. And then that's it. If the trade fails, it fails. That's it. There's nothing more to it. And that, by the way, it's not a recommendation because all trades fail. Hopefully not all of them, but we all take stops. So what happened here? We came back here and these sellers are still active. So now we got to see if these buyers come back in. Selling sounds pretty good at the moment. So let's observe it. And these are not trade recommendations. The buyers are here. Sellers are here. And it looks like these sellers are going to take it, but we're right on the edge of the canyon, you might say. Now, if we fall below this, then I'm going to be looking out here or in here. Not a recommendation. Let's watch. I'm going to look at your questions now. Yeah, candlestick. Yeah, there's the course. You might say what there is the Bookmap Discard Trader Lab community. I'm not a vendor. There's no cost for this. What this is actually what the market is all about. This is language. So if you want to, at least the way what this is, most of us use indicators as translators. Let's just say what they are, and we're letting some backwards-looking mathematical process define the behavior of the market. What this is order flow using the participant behavior without a translator. The translation is here in real time, so I know what this is. I don't know what will happen. It's no different than when you use an indicator. The difference is I can execute here with a stop here. And if it fails, I got pretty tight risk. If I get a big enough rotation, I can get risk neutral so that the worst that happens is if I take a stop, I scratch. And this is what we also work on in part of the Trader Lab. Risk management, trade management, the business of trading. In other words, this is a statistically based business. This is gaming. It's not prediction. Most retail traders don't succeed because they don't even know what the business is that they're in. They think it's a software toolbox business with a red light, green light, and then you have an ATM in the basement. I'm going to suggest, and with all respect to all retail traders, that is at best naive. And then you have all these internet gurus and the rest of it telling you the only one thing you need, or come to quote, pay $1 bazillion for a chat room and we'll give you the secrets. That's not the path, in my opinion. If you've done that, you already know the reality. If you haven't done it, I'm going to suggest you think about it. That's all. It's up to you. If what you're doing doesn't work, are you doing derivatives of a defective process? We all have beliefs. Remember, there was a time everybody believed that the earth was flat, and they would go to the grave defending that belief. I believe, again, my belief, that traders were using canned indicators out of a software toolbox and thinking that is all you need is the right mix of indicators and time frames, that somehow that's trading. I'm going to suggest no, it's not. Again, that's my belief. And the reason I have that belief is been there, done that. You don't do this for 45 years without learning a few things along the way. So this is where this trade fails. It's under here. Is it going to fail? I have no idea. Do casinos know what's going to happen when they deal the cards? No. Do they know how the gamblers are going to play the cards? No. Do they know what's going to happen? No. Do I know what's going to happen? No. That's it. What else do I need to know? Nothing. Because I can't know until hindsight. So what I know is this is a structured trade for me. And if it works, I go to VPOC and out the top. If it doesn't work, I take a stop and I just go to the next location. So I guess that wasn't my bus. And where are we trying to go with this long? Here. That would be okay for me. Would it be okay for you? And then if I get over there, where am I trying to go? Out the top. So, what do you think? By the way, is this trade going to work? Who knows? See, the thing about trading is, as because of our psychology and our primal wiring, we quote need to avoid pain, the saber-tooth tiger, and we need to be right. You can't get that in this business. Casinos, if the dealers just dealt the hands that would win, maybe they would do that, or they do it more often. They can't predict it. What they do is they play a game that has an edge, and then they depend on the random distribution of outcomes over a large sample size to extract the dollars from the gamblers, and the gamblers walk out with cash also. So in business, we have expenses, overhead, and all that, right? Well, is this business any different? No, it's not. So this trade looks like it's going south of the border. So, okay. The buyers were here. The sellers were absorbed. The support is down here. Now, I always mention in TraderLab, if we come under here by a couple of ticks, these buyers might reactivate. So I do not put my stop on right here. My stop is a couple ticks out. And this is in the streams all the time. If you haven't heard it before, you should go to the library or go to YouTube, put in Bookmap Tom B. And in the TraderLab, there's a library of webinars, a couple of them, number of them up to 5 hours long of real-time narration. So now I'm in real time. But the reason I go over what's happened previously, because this is a developing story, So what we want to understand is why this is why your stop would be, might we go up from here? Structured trade, order flow tells me what happened here. This is the stop and iceberg detector. So I know there's buyers here in the limit order book, and 209 sell stops came out. Does it help me to know that? Does it help me to know there's absorption here? What is absorption? The guys on the other side are taking the other side of this trade and consuming them. Think Pac-Man. If I come back here and the buyers that were in this area go, really? They may buy again. This is why this trade fails under here. And it can still fail. Doesn't mean it won't. What about up here? The sellers are here. The buyers are here. So if I don't get above here and I fall out here, the trade's over, and that's that. That's as deep as this gets. Crimper, if you can't read the chart, then you might want to learn how to read the chart. I understand it's unreadable. When I first got Bookmap, it was like I was in the Twilight Zone. I certainly had no idea what I was looking at. It's like any other tool. When you have a high-tier tool, you're going to use it, you got to learn it. You want to be a successful trader? In my opinion, you got to learn how to trade. This is a way to approach the market. And the thing about it is, if we understand market mechanics, we can keep our risk pretty tight using this approach. I don't know about you. I don't like, risk. I'm allergic to it. So I found, for me, and it's only me personally, that if I use a tool that allows me to see in the microstructure, I can be patient, I can execute, and I can increase my overall yield. And I always will take stops. It's just part of business. I can increase my yield because my entry is more structured and my stops can be closer. So if I'm running, so the difference is instead of running 4-point stops or 3 or whatever you're doing, anybody, I'm talking to everybody now. If I enter here and I can give this a couple ticks down here, that's not a lot. I could take a lot of stops. And yet, since I'm trading for larger rotations, when I get paid very well. So that's just my approach. There's other traders in TraderLab that'll have their stop under the low of the day, and they'll just go to the gym and trade targets. I'm doing the same thing. I'm just doing it in different fractals or time frames. I'm still trying to go here, and I'm still trying to come out the top. That's my trade. If it doesn't work, it doesn't work. And right now, if this thing goes south, I'm still thinking about the mid and checking yesterday's high. If we check the range, we can come back out. then I'm still going to be going for the longs. Right now, I have no reason not to be on the long side if I have structure and a trade doesn't fall apart. So I'm just sitting and waiting. So if this trade's going to fail, it's going to do it right under here. And we're still hanging in this thing. Now it looks like it's going to go south. So that's okay. Any further questions, guys? How we doing? Now there is another trade in here. So this trade would fail. The entry is here or here. This is your obstacle. If you don't scale here, you don't have enough room, then you would take a full stop. If you scale, so if you got in over here, this trade would fail. You take a full stop. Okay. And if anybody tells you they don't take stops, you should probably not be listening to them or even considering them giving you honest education, because we all take stops. So now this trade, no good. Now this is our next area to look, and we're outside of yesterday's range. So now I have no trade, just to sit. How you guys doing in YouTube? First, for me, it's longs. I'm getting the question, where would I change my position on longs? Well, I'm above the mid. I'm outside of yesterday's range. I'm above the all-time high. So for me, unless I'm counter trend trading, I mean, I could be, you guys know how I trade. I trade both sides. Doesn't matter. But for this stream, I'm attempting to stay with one dominant side. So my trade plan, I should say, for the stream is structured trades. This is more basic, standard trader lab process. And then so you guys understand, once you can develop a process that is consistent and you're consistent in your ability to execute it, you can then take it into more shorter time frame fractals. So you could be trading shorts on this failure here. The break here under here is a short if you trade counter trend, okay, subject to how you define trend. All these things are developed. You can develop all of this in TraderLab, or you're just out of your long and you're not taking the shorts. You're using the short to look for the long. You see, what is the right thing to do? The answer is not with me, it's with you. There are traders that are just going to wait for the long, and there's other traders that are going to be taking the shorts and the long. And there's other traders that are only faders, and they're only going to take shorts. Me, not so much. So for me, I trade both sides, or I just trade with the dominant side. Now here, what did we do? We tested the previous all-time high. What might happen here? A bounce. So this is not a trade for me. It can come back to here, but this is not a structured trade. This is behavioral. Because there's nothing that says, well, this is resistance here. Buyers, see what happened here? There's this concept you are familiar with. It's called resistance. Support, I should say, becomes resistance. Here, there was absorption. This is a micro trigger. I would not personally take a long here, and I don't care if it goes up from here, because I don't have a trade. I don't trade in the middle of nowhere. Just me. I'm patient. Remember, yesterday's high, all-time high. This is where our resistance is, and that's resistance here. So I would not be doing this trade. But we can read it, you see. So there's nothing here for me. I'm just saying, but part of learning the language of the market is to continually narrate it and understand what it says. It says this is too high, and this says this is too low. This is resistance, this is support in this fractal. Now, do you want to trade this thing? No, not for me, because it's kind of tight. So I don't trade this. Now, if I come outside further and I have structure, then I may trade this because now my stops are here, here, and depending what happens, if I come above here, then I can come back, you see. So we'll see what it does. Questions, guys? I got about 9 minutes. And remember, if you're interested in Trader Lab, there's 60 PDFs of these structured trades that you can download and reverse engineer. They look like this. They're available to everyone in the Bookmap Discord Trader Lab community. These are actual trades I took. You can see some of the what's it all about. And there's 60 of these, all different kinds of stuff. Order flow, what does it mean? And these are available at no cost. In addition, I just want to remind you of this. There's a Trader Lab community, which is a very active, interactive process. How to move from a certainty-based survival brain to a probability-based mind. Oh, that's great. A lot of interaction, charts are posted, discussions. We're all working together to get better. I post in here continually during the day when I have the ability to do that. So anyway, that's Trader Lab. And it's a community of like-minded traders who've come together, and there's no cost. You do have to verify your Discord email. There's the link in the bottom of YouTube. And come to Trader Lab, download the 60 PDFs that I just showed you of these structured trades, and also statistics and the library of webinars is available to you, again, all at no cost. And there's one other piece. Also in the bottom of YouTube, there's a link to bookmap.com. Now, to get the full benefit of the Bookmap education, you need to be a subscriber. Now, there's a bit of a workaround for that, and that is there's a free digital version of it. There's no cost, just to clarify, and you can get your hands on Bookmap. You can download it. It comes with data. I believe it's crypto. So you can kind of get your hands on this and kind of see. It's a limited, it doesn't have all the bells and whistles. Of course, it can't because there's no cost. But you can kind of get a sense of order flow, liquidity, how it impacts, the ads and the polls. You can see delta and a lot of other things. So it'll give you, and then you're a subscriber. Now here's by the way, where did we come? VWAP. Remember what I was saying? This, can come back here. Resistance, VWAP. It's not a trade. It's just, that's nice. Now, if you're skilled and you have a plan for it, notice where we came. All-time high. It is a potential long, but this is where you're going. So I don't trade this. I just go, that's nice. I'm not a scalper. I don't have the time or the patience for it. And cognitive capacity, because then fatigue comes in if you're trying to do all this. I try to do is put a trade on and go. Now, I was mentioning if you're a subscriber, and there is that free digital version, which you can download, you then can take advantage of all the subscriber-only education in the Bookmap Discord server. There's tons, not only on order flow, but stocks, options, crypto, swing trading, much more, market maker behavior, and the Bookmap Academy, which I think is one of the best kept secrets. Bookmap Academy is coaching and mentoring. And it's to help you understand market mechanics, order flow, and also get coached by other traders and see other methodologies or implementation of these tools. That's also available. And just want to remind you of that because nobody talks about it. I don't know why. Notice why this is not a long. Now, our next location is going to be in this area. I got to look a little further here, by the way. This is an outside edge. This is an outside edge, low volume. We're going to be looking in this area for potential long, not a recommendation. I mean, this thing can go to zero. Don't forget that. High volume is here. Mid is here. There's also stops under the mid. So we have front running here. Now, if I was on a short, which I'm not, of course, I would be looking to take profits ahead of the mid because I anticipate buyers here. So I would not buy this. This is not a recommendation. I'm just telling you me. I would want it to come under here. And then I want to see if I get absorption and a rotation. If I got long out here, I'd be looking for this, for a scale. And then back to the VPOC and out the top, which who knows. So we'll see what it does. Microstructure is here. See where we are? Yesterday's high, all-time high. So this is a very important area. So for me, if I don't get what I'm looking for based on my plan, I don't take the trade. If I run in here, I could take it here. This is where I got to scale. So I don't have the range. It doesn't qualify. One thing about trading, if you're compulsed, you're not in control. It's a very much intentional business, in my opinion. You have rules. Your job is to follow them. If this is the low and it goes out the high of the day and you're not on it, you're going to have an emotional response. What keeps you in the business? Following your plan that has over a large sample size of statistical edge. Hope you're getting something out of this. Please give a thumb up in YouTube. If you want to visit the Bookmap Discard Trader Lab community, download those 60 PDFs of the structured trades that I share here in the stream. Learn about order flow, work in a community of like-minded traders so you can leverage with them, because this takes a village, if you will, or a community, so that we can all get better. You can bring your experience. It's not about you changing what you do. It's about maybe changing your outcome. That's up to you. I hope you're getting something out of this. These streams, by the way, are available exclusively to Bookmap Discard Trader Lab participants to reverse engineer and review. All of that is, of course, up to you. If you want to visit the Trader Lab, feel free. We also just touched the full session VWAP. So again, I would not take this, but this is a potential long. So it's not my trade. It could be your trade. It's not my trade. Now, the other part of this is my resistance is here. I'm through it. I'm getting through resistance. So this is suggesting higher. And this is where we're trying to go. I would not be on this. So I don't have a trade here, personally. And that's not an apology. It's just I don't have a trade. If I took this trade, I'd be getting long here, my stop, and then I got the mid in front of me here still. So I'd have to have my stop out here. So I'd be getting long here. It's like almost 4-point risk. And I'm looking for that. And I don't have a trade. I don't have a trade. You can have a trade. Traders and Trader Labs will take this trade. Please give a thumb up in YouTube. If you're interested in the Trader Lab, there's the link down there. There is no cost. You do have to confirm your email so the server's kept pristine and we don't have spammers, trolls, and the rest of that. And I'd like to meet you in Trader Lab. Come on over, say hi. Please give a thumb up. This stream will be available exclusively to Bookmap Discord Trader Lab participants over the weekend. If you want to take advantage of all these resources and the additional education, use the link in the bottom of YouTube. And don't forget to download the digital version. You can get that if you go to bookmap.com, and there's no cost for that. Have a great day. Trade with a plan. Remember, it's not the last trade. It's all of them over a large sample size. That's what this business is all about. Having a structured trade plan that has a statistical edge, waiting for your trades to show up, accepting the random outcome of any interaction with the participants, be disciplined, and over time, assuming you can execute your plan that has a statistical edge, that's our business, and welcome to trading. Thanks again, guys. See you next week.